Hi, this is Zach here from Zach's Traders Cafe with a look at the major markets on Monday, the 19th of September. Starting off with the FTSE 100, it looks as though we've established or re-established this rising trend channel from the end of June. Floor of the channel currently running towards 66.50. That gives us a higher low versus August as well, which was 66.15. End of day close today above the 50-day moving average at 67.70 should be enough of a momentum trigger to at least take us back to looking at the best levels of the year to date above 6,900. Obviously the trend channel here, while 66.50 holds, is heading towards the 7,200 zone, but obviously that does seem to be quite a long way away at the moment. Onto the DAX, and here also a little bit more bullish than it did appear to be even as recently as Thursday. It looks like the market's found this rising trend channel, or the floor of a rising trend channel from June through the 10,260 level. At least while we're above that, then that we can't suggest that this market's going to break down just yet. End of day close above the 50-day moving average at 10,418 would be the earliest buy trigger for cautious traders. Below 10,260 then gives us the risk of a retest of 10,023, the 200-day moving average. Onto the US markets, and here obviously we had the jitters ahead of the Fed announcement later this week, but multiple day support there at 18,000. It doesn't look as though that's going to break very easily. We're effectively between that level, which is an uptrend line from May, and the 10-day moving average at 8,288. End of day close outside that range should determine the next direction. At the moment, with the RSI well below 50, we are still just about biased to the downside, but really it's all about the Fed, more of a fundamental than a technical play at this stage. Going on to the S&P, and similar to the Dow, we've got this rising May trend channel there. 2120 is the nominal level of that line. And at least while we're above that, we could head back towards the 50-day moving average at 2168, but only above that takes us on the journey up to fresh record highs. For the Nasdaq, this was always the most bullish of the three main US markets, and really gave the clue as to what their direction would be, i.e. they wouldn't break down significantly. We're above the 10-day moving average at 4781, and at least while we hold above that, looking for a target towards 4,900 or even 5,000 over the next few weeks. Going on to the currencies, and surprise dip for sterling below the 130 level, temporarily at least, on the last couple of sessions. Only just though, and what we need now really is to see an end of day close above the 50-day moving average at 131.65 to re-establish the base building that we've been seeing since the end of June, but at this stage really it's something where no man's land as far as the price action, either selling the 50-day line or buying towards 130. Onto the single currency, the euro dollar, and here we've got same old situation really between the 200-day moving average and the top of this triangle from last month at 113, so that gives us 111.46 to 113. And it's really a range trade within those parameters. For dollar yen, what we see here now is continuing with the consolidation as you'd expect ahead of the announcement later this week. What's that? 101.50 to 103, the current range, and we expect a reasonably big breakout from that range once the BOJ announce. RSI at 48, so slightly biased towards the downside for this market. Finishing off with gold, and here really it's a matter of seeing how the uptrend line from the beginning of the year is continuing to hold the market. 1310, the nominal level there. Well, we're above that. We're looking for a range between 1310 and 1350. If you're an early bird buyer, then you wait for an end of day close above the 50-day moving average at 1332. That's it from me. More updates at the same time tomorrow.